everybody always wants to know about which way the stock market will move this year. And for us in particular, will India's stock market go up even further, or will share prices start to fall? And most experts have one truly honest answer. Frankly, nobody knows. But there are many underlying factors which do impact our stock market. And many of those factors are not always obvious, and it's worth looking at them. So Raghuram Rajan, you have said that the Biden plan of spending $1.9 trillion could increase inflation. Now that will raise US interest rates, and that will make asset values, particularly the stock market, well, maybe they won't crash, but that will make them come down sharply. Now how will that affect India?
Well, one thing we've benefited from because of the Fed's very easy policies. Remember in March, everything collapsed. Remember where the Sensex was in March. And that was a result of portfolio flows leaving India. And again, we were in a crowd then because it left Brazil, it left Mexico, it left the Philippines. And all emerging market prices collapsed. We've now seen the reverse of that. Money has flowed in a really big way, which is why our reserves in India, foreign exchange reserves, are again at an all-time high. Money has come in. And so this is fickle money. This is money that can go out once again. And so if the Federal Reserve is eventually forced to tighten policy to combat the inflation, and the Federal Reserve has been very, very docile, saying, we will not do so. We are going to stay accommodative, but there's only so much they can stay accommodative. So I would suspect initially what happens is inflation picks up, they look through it, but eventually if it stays that high because of the spending, they have no option but to act. At that point, we'll have another taper tantrum of the kind we saw earlier, unless the Fed manages it really, really well.
Just to be clear, you're not saying it's definitely going to happen, but that is a kind of forecast by you, and you always tend to get your forecast right.
So there's many a step between that, between now and there. So if you have more reasonable spending, you have actually a fairly strong recovery in the US and Europe towards the end of the year. That can lift the rest of the world. That can be very useful. I mean, the US will run a large current account deficit. That will pull in imports into the US, which means China will export, which means China will pull imports from the region, which means many other countries. I mean, one of the things India's success stories has been our export performance over the years, something Arvind Subramaniam has written very well about. And so, again, we have the chance of growing out of our problems if we are more open, if we embrace the world economy at that point and grow out.
On the stock market, while in the real economy, everything has been trending downwards, the stock market in India has been shooting up. Ruchir Sharma, the author and writer who's now contributing editor with the Financial Times, showed us data which points out that there's a real disconnect. The world economy has fallen by 4%, but stock markets around the world have shot up by an average of 13%. That is a kind of 17% spread. And it's even more acute in India. While the Indian economy is falling by 7.7 or 8%, still the stock market has gone up by 12%. That's a 20% spread. Now, Professor Milgrom, this is a really startling contrast. The economy plummets downwards, and yet the stock markets go shooting up. What's the reason for this huge disconnect?
Well, the stock market is about the value for the future. You have to, when you have assets, you have to decide where to put them. And one of the things that happen, interest rates are so low. If you put assets in a savings account or in bonds, you get almost no return on it. So people don't have anywhere else to put their money that has reasonable returns, so they buy stocks. And they're not too worried about it. Everybody's talking about a quick recovery at the end of the pandemic. Assets, although the assets might not be making much money tomorrow, the day after tomorrow they'll be making a lot of money when the economies bounce back, which we expect they will. So if that, where else would you put your money? There is no place else. I think that's why people are investing in the stock market.
So you think there's a low probability that the stock market is going to crash in the near future? I mean, one shouldn't be too worried about that. I know that's a very unfair question, but is that an accurate assessment of what you're saying?
As Keynes told us, it's a lot. It's all about passions. You can be right about values and still lose money in the stock market because other people have different opinions and they drive the GameStop stock way through the ceiling, or something crashes when it should. And you should always worry about that and mitigate your risk. And if you need the money in the short term, you shouldn't be investing in stock markets. But right now, the reason the values are so high, I think, is that interest rates are so low. There's no place else to put your money. And there aren't safe places that have reasonable rates of return. And so people are pouring their money into the stock market because they have very little choice. Right. That's what I think is going on.
Professor Kremer, how has technology changed the world as we know it in this pandemic? And may I ask you a kind of personal question? How has technology during this pandemic changed your life for the better or for the worse? Give us some examples.
Look, my life is, I have a high enough income. My life is very easy relative to a lot of other people. And I haven't had a family member who's been infected. But, not being able to travel to see my father and my brother, that's been painful. And my son has been going to school remotely. Again, he can go to school electronically, so that's much better than many children in the world, but it's not a substitute for in-person education.
Right, it's been tough. I can hear that in your voice.
Yes. So the sooner we can vaccinate everyone, the faster we can end the pandemic. And increasing manufacturing and delivery capacity for vaccines means we can vaccinate people faster and get back to normal life more quickly. So think about it like filling a bucket with water. If you try to fill a bucket with a narrow pipe, it'll take a long time. But if you can build a high diameter pipe, then it will fill quickly. And vaccine capacity is like that pipe. Now, we developed in the world, and especially in India, which is producing a huge proportion of the world's COVID-19 vaccines, we developed vaccines and we produced them at an unprecedented rate. Historically, we've never seen anything like this.
Fantastic, yeah.
But nonetheless, with the currently announced capacity, many countries are not going to be vaccinated for a long time, especially lower income countries. And our analysis suggests that investing now, because there are long lead times, investing now to expand capacity further would be valuable, because it would let us reach widespread vaccination faster, particularly in lower and middle income countries.